Harris is Executive Director at Port Shelter Investment Management. He's with us now to take some questions. Richard, good to have you with us here. Thank you for your time. For a lot of our viewers here in India, Richard, the question becomes, will there be more selling here, foreign selling here? I was looking at the latest data, and that indicated that, and it's been why it's not as if it's not known. EM funds are underweight. Global funds are underweight India. I mean, relative to India's weight in the MSCI benchmark. But there have been outflows, significant outflows in a very short time span. What's your sense, Richard?
Well, I don't think it's necessarily anything to do with India. We, of course, have had some significant moves in China, and I think there's probably been a reaction there. I mean, foreign investors in Europe and the US are very US or European centric and tend to think very much of their own area. So they still have a feeling that EM is one general block. So I think what they've basically done is maybe look to lighten India a little bit, look to put some more money in China. I don't see this being lasting. I think the move in China may be lasting, but I don't think people are going to necessarily do that kind of swap in the longer term. I think people will look at India for its own merits and focus on that.
Richard, hi, good morning. And yes, Prashant, you were right, actually. Just for the benefit of our viewers, this briefing around fiscal measures from the government in China that's happening tomorrow. Today, it's all closed for the Dragon Week festival that's been underway, the Golden Week festival that's been underway. Richard, the question really is that even though you're saying you're not expecting this swapping India for China kind of a trade to last too long, the question is, what about incremental money? We've been kind of waiting to see FII interest return to the market, but we haven't seen the sign of that. And now you have China. So what should we expect from the FII fraternity? Everybody says the long-term narrative is good. The money hasn't been coming in.
Well, the long-term narrative is good, but don't forget that emerging markets tend to be right on the very edge of what investors are thinking of in the West. And it only takes a small amount of money to come from these very large pools of capital in Europe and the US to make a difference in emerging markets. So when you're sitting here, from our point of view, it does seem to be rather lumpy. It does seem to be rather broken in terms of its flow. But I think generally fundamentals will out. The Indian economy has been strong. You're still seeing, should we say, emerging market growth levels, economic growth levels in India, whereas China, of course, has been disappointing over the last couple of years. So I think investors are likely to see through that and to keep investing in these markets. But in the shorter term, we shouldn't be too concerned because remember, we are really at the end of the asset allocation making decision. And that's why you tend to see big inflows and big outflows of these markets, which are, if you like, emotional as much as anything else. But the big thing to remember is that if there is a turn, then there will be quite a lot of money coming in on the margin into emerging markets coming out of Europe, which make relatively little difference to European allocations.
Hi, Richard. Good morning. Good to see you, Win. What are you making of the data points we're getting from the United States? That economy seems to be in good shape, so to call it. You know, the data points are suggesting that. And what about your expectations from the Fed? 50 basis points should be a done deal?
Who would have thought it? It looks as if the Fed may have got it wrong this time. You know, why didn't we have a 50 basis point cut? Maybe a 25 basis points to save face. So clearly they weren't looking at these figures. I mean, I think maybe what a lot of people have missed, and it's a very, very easy miss, is that this summer was quite quiet. It was certainly quiet in Europe where I was. It was quiet in a number of areas, quiet in terms of the fact that people weren't really working. It was a little bit of COVID revenge. You know, people didn't want to take last summer off. They did take this summer off, both in the US and in Europe. And I think that those figures really came through. So we saw slightly weak numbers in July, slightly weak numbers in August. Now, all of a sudden, in September, they've picked up again. And I think what you have to say is we're looking at unemployment in the US, for instance, really being quite low. Not the lowest it has been, but, you know, it's really quite low at 4.1%. We've seen job creation increase. We've seen the consumer still growing. There's still money around. And this is still very positive when you look at a backdrop of enormous interest rate rises in the US. And we're in a position now, I think, where certainly all those people who are saying, oh, interest rates are going to be cut 3 times, 4 times, 5 times by the end of the year in the US will be confounded. That's just not going to happen. We don't really have enough data. We can't see that happening before the US election. So I think, we're in a situation that the economy still seems quite strong. People have gone from saying, look, are we going to have a hard landing to, oh, we're not going to have any landing whatsoever in the space of about a week. So I think the picture looks quite good still economically in Europe through to the end of the year. Clearly, there are issues and risks out there, but the economic picture is still ticking along quite positively.
Well, maybe as we spoke with Christopher Wood sometime back at Jefferies, and he said, and this is right after the cut, 50 basis, actually the day after the 50 basis point cut, he said, of course, it was just his thought. He said, well, the cut is political. I mean, it's intended to help, sort of one candidate over the other, the incumbent. But we'll see, and it'll be interesting to get his thoughts again on the matter. Richard, good to speak with you. Thank you very much for your time.
Thank you, Prakash.
Here on CNBC-TV18.